Welcome to Cambridge House Live. I'm Vanessa Collette here at the Canadian Investor Conference, Toronto. I'm joined by Michael Kosowan, Senior Investment Executive with Sprott. It's great to see you, Michael.
Thank you. It's my pleasure to be here, Vanessa.
Now, Michael, a lot of people were expecting the typical rebound that we have every September. Why do you think we haven't really seen that yet?
Well, we haven't seen a real rebound, I think, by and large, because the US dollar has been so strong. If I was to peg it on just one thing, or I was only limited to picking one thing, I would say that that's probably it.
Did that surprise you?
No, not entirely. The US dollar was down towards about 80 in mid-July. Since then, it's been on a tear. It's been all the way up to currently about 85. And I think because you typically see the dollar and gold reacting inversely, that's by and large what we're seeing here as far as the weakness that you're seeing in gold.
Right.
And if you extend that further into the gold equities, so the gold stocks, they likewise are suffering because the sentiment, the poster child for gold stocks is really gold.
Right.
And right now it's really being humbled because of the strength you're seeing in the dollar.
Now, we were just talking about, some of the companies that are still out there, they need capital more than ever. So have you changed your strategy in looking at companies right now, and what are you looking for?
Well, I think your viewers might find what I call the 4 M's pretty useful.
Okay.
So I like to think of things like money, as you just highlighted, and management, margin, and of course misery. And what I mean by that is the money is, as you've touched on, these companies need about 2 years worth of working capital in order to survive.
Okay.
I don't know that anyone can determine when exactly we're going to be putting in some kind of a bottom or how long this bottoming process is going to take.
Right, absolutely.
Secondly, as you alluded to earlier, in the mineral exploration business, things are actually cheap. If you're looking at buying projects, hiring contractors, looking at drill service contracts, these types of things are on sale. They're very low demand. So money is pretty key, and it can go a long way in this kind of environment. Secondly is management. I've seen a lot of your other interviewees who have touched on this, and I would re-emphasize that point because it is so critical for these smaller market cap companies. The guy in charge has a lot to say in what kind of direction, how to apportion the money, and where they're going to be looking for the best next opportunity.
Right.
Also, management is important in the context of if they give themselves a task, if they assign themselves a responsibility, that you want to make sure that they have the experience and the know-how to fulfill it.
Absolutely.
Whether or not they're looking for volcanic gold in volcanic massive sulfides or getting social licenses and permits in certain jurisdictions.
Right. So you put management above quality of asset?
I think in this kind of market you can lump them all together, but I do typically put management above.
Okay.
Yes, I would. The other interesting thing for me on the management side is you want to make sure that their incentives are aligned with yours, the shareholder. Okay. So if the company does well and makes a discovery, I think it's great for the shareholders all the way on up to management to do well also. So in that sense, that alignment keeps them on the straight and narrow.
And is the alignment, are you talking about ownership from management in the company?
I like to see ownership from the company and them having put their skin in the game. I mean, there's nothing that gives management that high, crystal clear clarity if they believe that if they're spending against themselves, so to speak. The third M I talked about was margin.
Right.
And in margin in the mining business, there's really two ways to look at it. You can keep your capital expenditures very low, so austerity measures, like a lot of the senior companies have been doing lately, that's the new religion. And capital expenditures as far as what the cost is to build out the mine. So those have to be very low because of the fact that the market is still pretty risk averse.
Right.
And they don't.
Fiscal conservatism, responsibility.
Exactly. So you want to see them keeping these lower budgets or certainly the budgets in line.
Right.
The other way you get margin is the good old-fashioned way, which is great. So discovering a high quality, high margin deposit really helps these companies out. I think it's not only important for the individual companies at this point in time, but it's in fact important for the entire industry because we are not mining the same kind of grade we did even 14 years ago.
Right.
So high value are certainly going to be in demand and are going to be looked upon very favorably by the seniors.
I want to get to misery.
Misery.
What's misery about?
Of course. Well, misery is, if you ask any of the investors that you'll see here who have been in this space for the last 3 years, they'll tell you all about it. Right. But the misery component is a useful one too. I think of it as bumping through this bear market and really grinding everything out. Again, a bear market gives you this incredible sense of clarity. Either your resource works or it doesn't. Your management is competent or they're not. And you bump through all this very important checklist as far as things that you need to see in the context of an investment you might want to make. And there it is for you, black and white. So that's why these bear markets are really useful. I think just one more thing in that context is misery actually allows you to upgrade your portfolio. So if people have been holding on to weak sisters or weaker types of investments, they have the great opportunity in this kind of market to upgrade. And upgrading, I think, does two important things. First of all, it gives you survivability. And the companies that are going to survive...
The key theme right now is, are you going to survive and make it survivability?
So, and the companies that are going to survive are going to thrive once we make this turn.
Right.
The other thing is, they are the ones that inherently have the most potential to begin with, meaning they have the best deposits, they've got the smarter management groups, they've got this great access to capital that they're able to harness at just the right times.
So when do you think we're going to see this turn?
Oh, that's the loaded question. Well, there are certainly braver people within Sprott that I think call the commodity price. I'm a mining engineer by technical background, so I've long been taught that when I wake up in the morning and see the gold price on my screen, that's my reality. And I have to build and design according to exactly that number and not look too much towards where we're going to make that turn.
Whether it's up or down?
Whether it's up or down, because I think that the demand is still going to be from the industry. We still need the metals.
Right.
And the stronger projects are going to be the ones to survive. So I know I'm dancing around your question, possibly, but I would be surprised if we're still at the same point 18 months from now.
And what do you see happening on a macroeconomic level?
As far as the dollar or as far as the market?
Well, is the resource super cycle over?
The resource super cycle, I think more about, you mean as far as people have brought up this concept of peak gold or peak oil in different contexts, and I think it's, even historically there was the Malthusian promise where we were going to run out of everything, and ultimately I'm a real fan of man to a degree. I think man's creativity really comes to the fore when it's pushed to desperation.
Necessity is the mother of
invention.
Right?
Exactly right. And things such as gold or oil, we have this ability to either find new technologies, develop new sources like they're doing in the oil and gas, and get smarter about it. I would say in the mining industry we could certainly use more innovation and more intelligent processes as far as exploration and development. And I think they're coming. I mean, the first step is really the belt tightening. And you're seeing the senior companies do that. It's all about austerity. That's, as I said, the new religion at this point in time.
Excellent. Well, Michael, it was fantastic having you on. Thank you so much for joining us today.
My pleasure.